It's due in full to a thing called a flu, I believe. So you'll forgive me for that. Righto, let's dig into the markets for the week ahead and see what our traders are thinking. We're going around the world as usual today, and we're going to the UK very shortly, and we'll wind up in El Salvador, to the deepest voice in trading. And we'll also be saying hello to Orlando, who's going to talk about the US dollar. Wow, what a subject the US dollar is. I think it's about the only thing that's consistently rising at the moment, apart from the price of everything, of course. We seem to have a little bit of a rally on the commodities on Friday, or certainly the precious metals and the indices as well. Whether that's sustainable or not is another story. But let's dig into the data points first up, and say in Brighton in the UK, a very, very good morning to my good trading buddy Ash. G'day, mate.
Hi, mate. I can hear that you're getting there, which is good. Last time I spoke to you, you were feeling a bit under the weather, but it sounds like you're getting a little bit better.
Yeah, look, on the improve, and I think the red wine helps a little bit.
Of course it does.
It's a tiny bit every day, and it seems to be getting better. Mate, what are you making of, or what's the data telling us, I suppose, about the week ahead?
Really interesting, mate. There's kind of a lot to consider right now. But just as Orlando is going to do, I am also going to cover a little bit about the US dollar, because everything really is about the US dollar right now.
Mate, the higher it goes, the more I rub my hands together.
I mean,
make more money when it crashes.
Well, this is the thing. Okay, so first, I want to bring up a chart of the US dollar. I rarely do this, but this is really a decent place to start. Now, this is a monthly chart of the US dollar, and if you draw in a line from around about September 2006, or maybe January 2005, and just extrapolate it left, miss this high here, go to this high here. Look where we are sitting. The 109 level is right at the top of this trend line. You can bring that down and create a channel down here as well. So, pretty nice sort of like range to kind of be looking at. And obviously, as we've kind of gone up on the US dollar, what we've really seen is it not coming back as yet and testing these levels. Now, that's quite important, because looking for a dollar crash just because it's at 109 and it's at the top of a range, I think it's going to be way too early. So we're not really looking for a crash, but what we could be looking for is some retracement in the US dollar. We're talking about the week ahead. Is the US dollar going to ease back this week? Well, we've got to think about the probabilities of that, and we're going to use some of the data points to kind of consider what the data points might be telling us about the possibility that we get some weakness in the dollar, and then potentially pushing up the stock market, the NASDAQ, the S&P, pushing up precious metals, silver, gold, pushing up oil, possibly pushing up Bitcoin, and all those kinds of things. Now, that is not a call to say that this thing is reversing. It's just a call to say that it may well ease just a little bit. We might see some profit taking. So let's have a look at the data and see what the data is telling us about that particular theory. Now, this is the COT data. Now, if we look at the US dollar over here, what we've now got is the commercial traders here. Now, look what happens. This is the red lines, the shorts on the commercial traders, and the green lines, the longs on the commercial traders here. So we'll have a look at these first, and then we'll have a look at price. So this is when they're heavily short, and they are diminishing the longs. They're taking long positions off the market. Now, look where we are again here. Now, if we look what happens at these particular points here, then if we see here, look how short they've been, and the dollar has rallied and rallied and rallied and rallied and rallied, and that puts us in a bit of a dangerous position. Really, what we want to see is these speculators starting to ease to the downside. We want to see these guys coming out of the market on the longs, and we might just be getting a little hint of it over in the corner here. So it's only a small kind of suggestion here, but it's possible that the speculators are just starting to. So the speculators are down here, the non-commercials. The speculators are just easing out of some of those long positions, and possibly building up some of the short positions as well. Now, the other thing that we can look at to kind of understand whether the picture is forming for that to be the case is again looking at another dollar instrument, another dollar trading instrument, which is the bonds. And look how the bonds are starting to build up here on the non-commercials, just starting to buy up some of these bonds. And it's a big protection play with bonds. Those bond yields haven't managed to break through substantial for a significant period of time, the 3% level. This is the 10-year. So we're starting to see the 10-year on the speculators just starting to buy up when these lows were hit. So are we about to get a rally, a very, very small rally? It's a near-term thing. We're not looking at long-term reversals, but a near-term rally in the 10-year. Possibly. Are we starting to get some easing back and some profit taking in the dollar? Possibly. This is what it's really telling us. And you know, we only ever can work on possiblies anyway. There's no certainty in trading. You know, you're very rarely going to find a point you can say anything for definite. Let's have a look at the seasonal data for the dollar. You know, so we're starting to build a picture to suggest that there could be some weakness coming. Now, this is really interesting. July, but after the first week, this is July to August. After the first week of July, this is the dollar index. The dollar index has one of its worst periods for selling right into August. So that is also suggesting that even though the dollar is strong, the fundamentals still back the dollar. But you know, even though the dollar is strong here, the seasonals are suggesting that we are in a particularly weak period. The COT data is just giving us a little hint that there could be some profit taking. And the very final thing that we need to look at here is, why would people be taking profit at this particular point? We've got data points, CPI data continues to push way beyond anybody's expectation, getting very, very close to the 10% level. There's calls for a potential move of 100 basis points, which is also is 1%. 1% is equal to 100 basis points on the interest rate. And there's other calls for 0.75, so 75%, sorry, 75 basis point move. Now, what's been priced in is the possible 1% move. So if they were to come out and say, actually, we're okay, 0.75 is fine. If the Fed are going to say that, there's another chance that there's some profit taken on the dollar and we ease the downside. But the big thing is that the next FOMC statement and the next rate is on the 27th of July. That's 10 days away. So is there going to be some uncertainty as we go into that? Are there going to be some speculators and some traders that have been buying up the dollar hard with the anticipation of the 100 basis point rise that start to go, you know what, we don't need to take the risk. We've had a great run on the dollar. We've had a great run on our trade on the dollar. Shall we take some profit off the table? And that would lead us back potentially down to a support level. So I guess that the case that I'm making is that there's a decent chance that there is some profit taking at these levels. This is a monthly chart. We're at the top of a trend line. The COT data is suggesting that those commercials have been short without any kind of respite in their particular positions. The 10-year is starting to see the speculators just come into the market and just go a little bit long. So this is kind of building a picture that we could see some easing to the downside of the dollar. Now that would potentially push up the euro as well, which you know, considering it's at parity, the euro needs some relief. So a little relief rally in some of these other markets, I think, could well be in play in the coming week, mate.
Yeah, look, I think it's a great short-term analysis, mate, on the dollar, and longer term, I've got a completely different story on the dollar in longer term, because, you know, as soon as we're hearing it now, with looking at Saudi Arabia, I won't say actually getting into bed with Russia, but there are talks along those lines. That'll bring in China into that equation, and they'll start saying, well, why are we valuing our oil in US dollars? The minute that happens, and you've got India as well saying things like, you know, why do we need to trade our goods and services, or goods in particular, in US dollars? We don't. Yeah. And, you know, as soon as that gains momentum, then it's bye-bye US dollar for mine.
Yeah, totally agree, mate. I mean, the other two key things to recognise is that there's short term, medium, and long term. So we are basically, what I'm basically saying is, in the short term, we might well get some.
And I agree, 100%.
Yeah, some easing down, but the medium term, I think the dollar rallies. But I agree with you in the long term. And what's really interesting here is CPI data coming out the way it is pushes the Fed towards raising interest rates. However, the other factor that we need to be recognizing here is that there is a possibility, and a pretty high one right now. I think, a lot of markets participants and economists are saying 50-50 chance of a recession. It's probably higher than that. Now, the Fed can do nothing if interest rates are at zero. So the fact that they have to raise interest rates to give them some room to maneuver when that recession comes also suggests that in the medium term, the dollar is going higher because interest rates are going higher. 3%, I would say almost definitely. 3.5%, 4%, 5%, I'm not so sure, but it might have to get there. They might have to get there just so they've got some wiggle room to work with if or when that recession comes. So there are factors at play which suggest medium term dollar long, short term dollar weak. But I agree with you, in the longer term, the dollar's in a lot of trouble.
Yeah, I'm hearing things on the grapevine like depression or hyperinflation. Which do you want?
Yeah.
Anyway, there's probably better subjects to talk about than that, or happier subjects to talk about than that. And one of them would be, I'll see you tomorrow in Trading Buddies.
Yeah, for sure, mate. For sure. We'll get down to business in the morning.
You bet.